The Santa rally is canceled as small caps are hanging on the edge of a cliff and looking to crash, which will take the whole market with them. All that and more on Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today as we take a look at the colors on your screen. The moving averages, 21 days in red, 50 days in green, 100 days in blue, 200 days in tan. Price versus momentum. Price is a general direction prices are headed. Momentum is the rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Let's take the market breadth is getting ugly. We talked about the risk of a potential rollover in breadth. Let's see it here as we look at the percentage of S&P 500 stocks above their 50-day moving average. And what do we see? It's rolling over and heading lower. In fact, it's leading the broad equity market lower, suggesting that, again, a smaller and smaller number of stocks are holding the indices up. And when we take a look at the percentage of S&P 500 stocks above their 200-day moving average, we see that trending lower. Now, what do you know? And when you look at this chart and you see this -2 standard deviation bar, what normally happens here in the past? You see buyers come in. So don't be surprised if there's some buyers early on in the market as it opens Sunday evening going into Monday. Look for that to happen. If it doesn't hold well, this picture is going to get really ugly, and for good reason. Let's take a look at SPY. We see price flipping bearish as the 21-day moving average heads lower. Momentum now bearish across the board, all on the moving averages. Look at this, below the 9, 21-day, and 50. And what do you know about when it crosses the moving averages on the way down? It usually signals a beginning of a trend change, particularly with the 50-day, and we see 1 month momentum negative and rising, perhaps any of all the things positive going on here. Let's take a look at SPY. What do we see? Very clearly defined sell zone up here. So between 464 or thereabouts and 470 is where sellers are at. Every time buyers are pushing into this area, sellers are happy to unload. And that is telling us that the most likely direction for the S&P 500 is to come down and retest this bottom end of what's called support. You see, this is a buy zone. That would take away the Santa rally that everybody's hoping for. But do keep in mind there's plenty of support there. And if that wasn't enough, there's plenty of support below that. But right now, sellers are saying, no, don't come down my chimney, Santa, because we're headed lower. And even Momentum Timer Pro, now mind you, the subscription is still free. It's a daily momentum report that I send out. I'll put a link in the upper corner of your screen if you want to check it out and sign up. But look at SPY. If you look at the momentum over the last 1 month, 3 month, and 6 months, so these are windows based on a proprietary momentum screen I put together. Look at what it's telling you. It's not saying mid-size position on the 1 month minimum position, on the 3 month mid-size, on the 6 month. So even momentum is telling you what the charts are already suggesting is that perhaps the S&P, if you're in it, maybe you shouldn't overweight or maybe you should hedge your position. Now let's move on to the NASDAQ. We see the percentage of NASDAQ 100 stocks above their 50-day moving average. That too is rolling over as it hit the mean and came down, looking at now a -1 standard deviation to the downside, again leading the NASDAQ 100 down as a smaller number of stocks hold this whole index up. Keep in mind that when it hits these kind of -1 or -2 standard deviation, you just find some buyers. Don't be surprised if things kind of goes down and then picks up some buying support under there before it perhaps heads lower, because look at the percentage of NASDAQ 100 stocks above their 200-day moving average. It didn't get anywhere, and again leading the index lower, and that is putting tech stocks at risk, of course, as they're blacked out from buybacks right now. Let's take a look at the momentum screens on QQQ. Price flipping bearish on the 21-day moving average, just like SPY. Momentum across the board has gone bearish below the 9, 21, and 50. 50 being the most key here, 21 leading that. And what do we see as we flip over to the charts? Well, we see a similar picture as we see a very clearly defined sell zone above here between, say, 388 and 400. And what is that telling us? Support is where that volume profile line is in red at 367. again, breaking below the 50-day moving average, suggesting that the likely move for the NASDAQ, like the S&P 500, is lower, not higher, but don't put it past the bulls who will look at the 100-day moving average as an opportunity for support. Let's see what Momentum Timer Pro thinks about it. And looking at the QQQ, looking at a 1 month window, it says minimum position size, 3 month window, minimum position, 6 month window, mid size. So it's telling you, these aren't max positions, just like the SPY is telling you to take some of that risk exposure off. If, it's just giving you another look at the markets. If you don't have time to look in detail, that's what is helping you out. Let's take a look at small caps, see the percentage of S&P 600 stocks above their 50-day moving average, that heading lower along with the S&P 600. We'll take a look at IWM in a moment. How about the percentage of S&P 600 stocks above their 200-day moving average? Remember, when you're below the 200-day moving average, it's a very bearish signal. A lot of money managers will tend to start selling at that point. This is looking at a -2 standard deviation over the last year, looking to break lower. And let's take a look at this. Price and momentum now bearish across the board, with momentum leading price below all the key moving averages. 1 month momentum is now negative and rising, but 3 and 6 months, these are more important, are negative and falling as it breaks trend. Let's go to the charts and see how ugly IWM is, because it's terrible. And we talked about last week how this was a bull trap. The bulls drove this up, got sold into. Look at this 1 year chart. I think the story tells it all. Over the last 1 year, all the selling has been at 222, and look, it's sitting right on the edge of this major support bar at, let's see what we've got here, at 211, and the zone is all the way down below into 207. You break this 207, zoom out, and look what happens. There's nothing. There's no volume. There's nothing to hold this up. And now all of a sudden, you are in a crash pattern for small caps. And if you don't think that's important, keep in mind, small caps lead the large caps. That's very important to know. All right, let's see what MTP thinks about it. I think we already know IWM, no position size. It's saying, hey, if you're in this, you should be concerned, because all this is just trader's paradise. These bounces up and down. If you're a longer term investor looking at 1, 3, or 6 month windows for your investing plan, well, it's telling you it's no position size. I mean, makes sense. All right, well, let's put MTP behind us till we get to the bonds, and let's continue on and see what we got here with IYT. We'll notice that momentum is bearish. We now are seeing momentum leading. Price lower. Look below the 9-day moving average, now below the 50-day. 50 is again important, across below that, and then we'll look for price to confirm up to the bottom side of it. 6 month momentum negative rising, so that the 3, 6, 9, 12 month momentum are giving us some good signals, but we're seeing some early signs of a potential peak in IYT. Let's go to the transportation sector. And here you can see, the 21-day moving average is a good example. See, it crossed the 21-day, fought it, came down, and look, it bounced up and confirmed against it and failed. And it's fallen 21-day now. Now, it crossed the 50, crossed it, bounced through it, crossed it again. It's starting to find the 50-day moving average as resistance. Got the 200 and 100 below, so that'll act as support. Plus, you've got support here at 252. But look again, all the transportation sector are doing is following. Leading what you see with the big caps heading lower, and it makes sense why there will be no Santa rally this year. How about the energy sector? Unchanged on price and momentum, flipping below the moving average. Remember last week everything was flipping above. Now we're back below. Not a good sign if it can't hold its moving averages, because that's where you want to see rallies begin, is crossing the moving averages. Let's go down to look at crude, because it gives us an indicator. And look, we talked about this last week. 72, now 73 is right where all the sellers are at, between 72 and 73. The buyers are below at 62 to 65. So people who have crude are happy to sell it, and that's what's telling you here. The people who are bearish are unloading at that price, telling you what they think is going to happen. How about the XLE? We talked about how this was looking to head lower. It kind of bounced up into here. You see it's crossed back over the 50-day moving average, couldn't hold it, and now it's coming back down. It's going to look to try to hold perhaps the 100-day moving average right in between that and the 200. How do you know that? Look at a little bit of volume popping out here. Tons of volume support below. So there's a lot of support below. Setting up again, forget the Santa rally. It's telling you there's more likely a Santa little correction coming in the markets. Let's go on to, how about the financial sector? Unchanged on price and momentum, dipping below the 9, but more importantly, below the 100-day moving average. Of course, financial stocks, they're, the banks blacked out from buybacks right now. That's hurting them a little bit. but not too much, because look at where the support is at. Is it 38? And why is 38 key? If you've been watching this show, if you started watching the last couple of weeks, you already know this is the price level where the banks started buying their shares back, and so that's why that's why there's support there. But the question is, this time, as the economy is looking to slow, as small caps are looking to break lower, will that be bearish for financials? Will the blackout end in time to get this the buyback window end in time, so the banks can save perhaps a dip in their stocks? How about the industrials? Should be no surprise here where this is headed. It's going to follow those major indices and start leading them lower below all the key moving averages. They're going to be flipped all in 1 week. How about that? Let's take a look at XLI. Breaking below that 6-month volume profile. It's not an end of the world yet. But look, you see over this last year, even look, you see all the volume is trading here. Anytime price gets up here, somebody's selling. So what does that tell you? Now, either you believe the buyers are stronger here and going to hold this up, or again, it's telling you forget the sand rally. Price, if it continues to head lower, is going to go down quite a bit. I mean, we got to zoom out to a 2-year chart, and you start seeing the next level of support is at 88, and it's sitting at 102. No rally coming. Charts are not looking pretty. All right, let's go on to utility sector, which is bullish across the board and unchanged across the board. Let's see what's going on in utilities. And what do we see? 6-month volume profile held, broke. Did it get to new all-time highs? Let's zoom out and see. It did. And guess what? It briefly got there and got rejected. Let's go out a little bit farther. And sure enough, new all-time highs as people look for a defensive position in the utilities. Will it hold, or will it get rejected as it did before? Remember, utilities are kind of the last place people hide out. They think it's safe until it's not. You don't believe me? Go back and look how utilities formed during the great financial crisis. How about large gold miners? Everybody's super bullish on gold, no matter what the time of day is. And there's some positive here. We're seeing the 3, 6, 9, 12-month momentum. These are all negative and rising. So it's telling you it's trying to create some momentum off of these different lengths, and that's good. Even though range below is 21 and 50-day moving average and 100. Let's take a look at GDX and see what's going on here. And what do we see? There's a 6-month volume profile. Is still acting as overhead resistance. So as the bulls got really excited kind of going into the end of the week, we got this. I mean, they keep saying, we got this, and they keep not. Looking at the 90-day, you see there's the volume profile acting as overhead resistance. How about 30-day? So do you want to see why it rallied? Let's go to the 10-day. When you see the 10-day dip below where all the buying is at, you get a bit of a thrust. The problem is there's a lot of overhead resistance, even on the 2-year chart. I mean, there's a lot of trading over the last 2 years. So look, if you're bullish on this, you've got a lot of sellers you've got to get through. The risk to GDX as it breaks down to this 28 level, and then the floor starts to look like it's falling out. That is the risk of what's going on in the mining stocks. And emerging markets aren't giving it any sign of hope. Price momentum, all bearish. Back below the 9-day moving average, 1, 6, and 12-month momentum, flipping negative and falling. EEM's leading and telling you kind of where gold miners are headed. If you've never looked at the relationship between these two, I would encourage you to pull a chart, and you'll be like, wow, look at that. 6-month volume profile, overhead. What is that telling you? Sellers above. How about we zip into the 90-day? Selling above. How about the 10-day? Yeah, see, it's above. That's the problem. And look at the last year, it's way up there. Emerging markets looking to head lower. Massive support at 44. Over the last 2 years, that's where the buyer's at. That is where prices are likely to head. And at some point, they're just going to gap right down and get real close into there. And when emerging markets go, well, it tells you where the rest of the market is likely headed. And that's down. It's a leader, not a lagger. All right, let's keep going on to high yield bonds. These are junk. And we know that because when high yield bonds start to head lower, well, the broad equity market falls. Price momentum remain bearish now flipping below the 9-day moving average. 3, 6, and 12-month momentum negative and falling. Only the 9-month giving a little bit of optimism, but don't put too much stake on that as we take a look at the high yield bond space. Look at that beautiful volume profile line telling you everybody's selling. They can sell into all the buying support. Looking at the last 1 year, it's selling there. Let's go out to 2 years, selling above. So the only thing this has going for is it happens to be above his 21-day moving average, but notice across the 50-day, reconfirmed against it, got rejected, reconfirmed against it, got rejected, reconfirmed against it, rejected. What is it telling you? The trend for HYG, I almost said EEM, for HYG, well, and AEM is lower, and that's not good for the broad equity market. All right, let's move on to TLT. Of course, we know the Bond King loves duration, loves as much of it as he can get. Price momentum bullish, now above the 9-day moving average, so above all the key moving averages. 3-month and 12-month momentum are negative and falling, but is that enough to deter TLT from where it's about to go? Well, the answer is no. And let me tell you how you knew what was going on. Now, if you've been watching the show for any length of time, we look at this volume profile line. What did we look at last week? The 2-year, the 1-year, the 6-month, the 90-day, the 30-day, and the only thing that was where price was holding right in here. Every time it came down here, buyers were there. So you knew what was going to happen. The 10-day volume profile was higher. Now, if you were to go back and look at the video from last week, you would see that. And what happened, the 10-day flip down, supporting this as a bottom. If you're a short-term trader and you see that 10-day volume drop, that's what you should look for. Price is going up. Tells you the path now for this is into 152.25. You see a little bit of volume there. Let's go back to the next 90 days. There's not a lot of volume after this. The next path for that then is up to 157. And let's go out to the 2-year chart. And then from there, you look to see a lot of momentum algorithms get behind this thing and drive it up into the 160s before you'll probably see some sellers try to put a halt to this if they can. So bullish picture on TLT saying no Santa rally. And what is momentum time, bro? It's been telling you for a while. Here you see TLT is looking at the last 1 month, looking at the last 3 months and 6 months. In position size, you have mid-size, min, and mid. So it's been telling you, look, if you look at momentum, it's telling you should be building up positions here. That's what this thing does. It not only tells you where you should be looking at to back your other data up, it gives you an idea of what sort of position size if you need help with that. And it does a really good job of that. Let's take a look at gold. Price and momentum unchanged, now back above the 21-day moving average, above the 100-day moving average. So a little bit, perhaps some optimism for gold as it tries to come out of what looks like an ugly situation. The 3-month momentum is positive and rising. Let's take a look at what we got for gold futures. There it is. 6-month volume profile is holding. It jumped up there, so that's a good sign. Let's zoom out and then we'll zoom in. The 1-year, so you see a lot of shares now dropping. So this is potentially bullish for gold. Let's go to the 2-year. It's sitting right just above the 2-year mark. So maybe on the 2-year, not quite, but looking at the 1-year for sure, price is above it, telling you that people are buying the heck out of this at 17.85. Now let's go to the 30-day. Notice the last 30 days, buyers at 17.86. It's why you got a pop. Let's see did we look at 90-day? Notice it's coming down and confirming the 90-day. So this is bullish as well. It's coming down in here and saying, look, a lot of you were exchanging gold at about 1,800. It's trying to confirm that. And how about the 10-day? And there you see why it popped. Finally, there was enough shares accumulated. Again, let's go back to the 30-day. Look at all these shares accumulating down here, and you get a pop. Now, does it hold or not? Well, that's a good question, because if it doesn't, again, this still looks like a topping pattern to me. Very unusual to be a bottoming pattern unless this manifests itself coming back here from April of, say, this year. Maybe it turns into a bottom. But usually when things go wrong, gold goes down, because if you're not looking at King Dollar, which we will in a moment, you should keep an eye on that. Because silver, let's see what silver's got going on. Back above its 9-day moving average, 3-month momentum, negative and rising, otherwise unchanged. Let's see, is silver going to finally do, I know a lot of people super bullish on that. Look at the 6-month volume profile. It's telling you, nope, getting rejected there. And notice that, again, 1 year, they're sitting way out there. 2-year is below. And so we know, again, we talk about this used to be a sell zone up here, 27, 28. This was a buy zone. This is how you do this around 24 to 25. The buy zone has turned into a sell zone, and now it's forming a new one down here. So this is what you might want to do. If you're drawing lines, you just copy your line here. And now we see a little zone building, and then we'll duplicate it again and put it down in here. And you can see, look, there's some other times that people are buying here. You could go back and notice this is called a supply zone. So here's sellers. Now there's buyers. So let's zoom in over the last 6 months. It starts to make sense. See how it's fitting into this volume profile. Let's zoom in a little bit more. See how it's fitting into that the volume profile. See how those lines fit in. So that's how you know this is a supply zone. And the only question now is, can the buyers hold this and drive it up into 24 and get those people who sold to change their mind? That is the question. But watch out for the dollar, who's telling you, again, no standard rally from the dollar's perspective. Price momentum, all bullish, above the 921 day moving average, all green. And now some of you are saying, hey, that's usually a reversal coming. Not in the dollar's case this time. I don't think you're going to see that. Let's take a look at the dollar up here at 96.67. Zoom out to the 1-year chart. We're going to get a little further out to the 2-year chart. And it's looking to break this 97. If it can get in here, and the sellers are right, you know, it's right at the bottom of that supply zone. They're selling. If they don't hold that, then all of a sudden you run the risk of getting up here near 98. If they don't stop it at 98, you're at 100. This is a beautiful bottoming pattern. All the people who told me now that the dollar was going down, this is a clear bottoming pattern. Let's take a look at UUP and look at that. Over the last 2 years, all the shares being sold or exchanged at 25.28. So you know that's where the buyers are at. Look at the 1-year chart. Same thing. This is a bottoming. This is a pattern. This is bullish. Let's go to the 10-day, and you can see it's holding the 10-day. It's even holding the 90-day. There it is below. How about the 30-day? So you see the sellers are right there where they should be, and unlikely to hold that. So keep an eye on the dollar, because that's the end of your Santa rally. And with that, it's all the end of the show. See you back on Monday. Thanks for watching. Bye now. The content of this video is provided as educational information only. It's not intended to provide investment or advice. It is not to be construed as recognition or solicitation to buy or selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre. On personal capacity, opinions expressed in this video that do not affect the view of Atlas Financial Advisors Inc. or Steven Van Metre Financial.